Today I'm going to discuss Piggyback Mortgage Calculator. Stay tuned because at the end of the video, I'll share a list of tips and tricks when using a piggyback loan. You won't want to miss it. I'm Kristin Stampini and thanks for joining me today. So, understanding piggyback loans. A piggyback loan, which is also referred to as a blended rate mortgage, is a combination of two mortgages. It essentially involves taking out a second mortgage to amass a down payment over 20% of the value of the property as means of removing the need to pay a private mortgage insurance lender. So it is not possible to use a piggyback loan to cover a down payment against a government-backed home loan. For example, USDA, FHA, and VA loans don't qualify. The combined cost of the two mortgages can be less than the cost associated with repaying a single mortgage in addition to a PMI premium. The most common forms of a piggyback loan are 80-15-15 or an 80-10-10 or an 80-15-5. In this case, the first number represents the percentage of the first mortgage, and the second is the second loan, and the third is the percentage of the down payment, which can range from 5 to 15%, sometimes a little bit less. So the piggyback calculator will estimate the first and second loan for the piggyback loan mortgages. You can choose principal and interest, bi-weekly and interest-only options. You can choose the interest rate and loan term of the first and second loans. So the piggyback loans are usually available on conventional mortgages. The conventional loans are based on the lending guidelines of the Federal National Mortgage Association, or Fannie Mae, and the Federal Home Loan Mortgage Corporation, Freddie Mac. Most jumbo loans also meet Fannie and Freddie guidelines and are eligible for a piggyback home loan. Piggyback loan calculator, you can use this piggyback loan calculator to make a decision as to whether you should opt for a piggyback loan as opposed to taking out a loan to cover private mortgage insurance. This piggyback loan calculator enables you to quickly and easily compare the various mortgage offerings and are available to choose the option that is best suitable for your unique financial situation. Everybody's different. A piggyback loan calculator lets you look at an example of how a piggyback loan may operate. Let's say you are buying a home that costs $300,000 and you have a down payment available of 10%. You have secured a 30-year fixed rate mortgage, let's say at 4%. The option you could have available, or actually let's say 5%, are, let's say you borrow 90% of the value, so $270, and pay the PMI. So if you actually are looking, I'm giving you examples of exactly what that looks like and computerized. So look at the graphics and you can kind of see exactly what that is, what the payment is, what the monthly PMI payment, your total payment, okay? An option 2 borrower would take 80% of the value of the home, let's say $240,000, and take out a piggyback loan for the remaining $30,000. So again, make sure to look, and I'm providing you with information on the screen of what that actually looks like. So take a look at it and see which payment may be better for you. And as the calculations above indicate, option 2 will result in a monthly payment that is $54 lower than option 1. However, it is more important to bear in mind the fact that the second loan may incur origination fees that increase the cost of this option. So, tip. It's common to see the 75-15-10 used in conjunction with the purchase of a condominium. This is because mortgage rates for condos are higher when the LTV of the first mortgage exceeds 75%. So to avoid paying higher rates then, condo buyers will limit their first lien and take 75%, and the remaining 15% is handled by the HELOC. Other buyers will use the piggyback loans because they're buying a home which exceeds their local mortgage loan limits. So via the piggyback loan, they can borrow, for example, up to maybe $484,350 with their first lien, and then borrow the additional amount required via a second loan. That's an example. So as an illustration, a buyer plans to make a 10% down payment, let's say, on a $700,000 home where the loan limit is, let's say, $560,000. He or she may opt for a first mortgage of, let's say, $560,000, a second piggyback mortgage of $70,000, then put the $70,000 down. There are many reasons to consider piggyback loans. So thanks again for tuning into my channel. I hope you like this video, and if so, don't forget to hit the thumbs up. Leave a comment and subscribe to my channel. I provide weekly videos to help you. Okay, so you'll know every single Tuesday you have a new video. If you would like a list of tips when using a piggyback loan, leave a comment below and I'd be happy to get that for you. Also, if you have any questions, because I know it is a little complicated, just reach out to me and I'd love to talk to you. Bye.